Well, indeed, it is time for Ask the Expert for this Wednesday edition of the morning show here on Newstalk 1340 and 96.3 FM, KWLM, and streaming around the world at KWLM.com. And as you just heard, Heritage Bank, good enough to be with us here from Wilmer, and Jared Williamson, a mortgage loan originator with Heritage Bank, with us this morning. Jared, good morning.
Good morning.
Fantastic to have you with us here on this beautiful day. And Jared, we'll just jump right into it here. Every spring we hear some of the same questions. Should I wait for rates to drop? Is now a bad time to buy? Am I better off renting another year? So let's clear up some common mortgage myths that we hear or we're hearing in Candy, Ohio County right now.
Yeah, absolutely. Happy to do that.
Yeah, and the first one here, we were just mentioning, should we wait for rates to drop before I buy?
Yeah, that's a great question. So it's always, of course, up to the buyer and how comfortable they are with the payment. That's basically what it comes down to in my eyes. But as far as rates, of course, before we dive into kind of where they're at, every loan program is a little different as far as interest rates. They take credit, obviously, into the account of what your interest rate would be. But generally, interest rates have stabilized as of late. We're kind of at the end, considering the end of April, we were right around mid sixes. For interest rate, we have seen a little tick up in rates as of the start of May here. But so it's really hard to say if it is a good time for you. I always say as well, we can look at, you find a payment that you're comfortable with right now, and we can always, it's a good line, marry the house, date the rate. You can always consider refinancing.
Exactly.
If rates do come down, but there's no guarantee that they will come down.
Sure.
So it's always hard to say.
Okay. Yeah. And also waiting another year, will that make homes more affordable? Boy, that's kind of looking into the crystal ball there.
Yeah, that's we never know, and something like that, of course. But generally the trends, historically, year over year, we typically see like 2 to 3% appreciation, which again is going to bring sales prices up, potentially. Of course, we're kind of again crystal balling here a little bit, but as far as just houses in the county, in the area, inventory is better, and we're still seeing houses move and more inventory coming in. So,
sure.
Yeah.
Okay. Also, heard this one as well. Spring is a terrible time to buy because everyone else is buying, and this is true, I guess.
Yeah, it's a lot of business going on right now in the spring. That's just kind of how it works in Minnesota with the snow. A lot of people don't want to list their house when
exactly
their lawn's covered. They're not beautiful lawn. Yeah. But no, I would say no, it is a good time to buy. You're just going to have more options available to you. Like I said, just listings we're seeing increasing this time of year. Very common for our climate, I guess.
Sure.
And as far as just what buyers are seeing, I mean, like I said, more inventory. There's less insanity, I guess it would be a good way to put it, from like the 21 to 22 when we saw the COVID with the really low interest rates. We were seeing people not doing home inspections, different things like that. A lot of that has eased off for buyers, getting a little better. Some better deals are to be had if you're willing to wait a little bit and looking for the right house. And then also like seller concessions and different things for negotiations are a little more flexible than what we've seen in the past. So,
okay.
Yeah.
All right. Also, if rates are high, mortgage options are limited. Rates don't eliminate options. They make strategy more important.
Yeah. Yep. And I mean, the rates again, I don't know if we'll ever see rates where we were at again during the COVID era, the 2-3%. I just don't know if that'll ever happen again. So if people are waiting, it's always hard to say what will happen there. But as far as, there are some options to help figure out a payment that works for you, as far as whether that's a shorter term loan, longer term loan. Shorter term, of course, generally has a cheaper interest rate for you. But basically what we do is we try to structure a payment that will be comfortable for you and your lifestyle and what you kind of want to get out of your house too. So
okay. Now, do we need a 20% down to buy a home? That's I've heard that one too.
Yep, that's a very common myth, and I think most people are aware that that is not the case anymore. It is great to have 20% down. You eliminate mortgage insurance. That's always the big, that's why people talk about 20% down. Just helps you get a cheaper monthly payment. But there are programs like, we got FHA, 3.5% down. There are some conventional programs in the area that we can do like a 3% down conventional. Also, there's the VA, USDA loans, and those can require basically zero down if you qualify. So there's some different eligibility stuff for that, but great options.
Yeah. Also, pre-qualification and pre-approval are the same. Is that true?
Nope, they are different. A lot of people use them interchangeably, but as far as the mortgage side of things are concerned, a pre-qualification is normally just a conversation that we're having where we're running income numbers, monthly debt, kind of get an idea where your credit score where it's at, excuse me, and just try to figure out what would be a comfortable payment for you, what you qualify for on paper. We don't pull credit for a pre-qual. We don't verify income numbers, and that's kind of the difference. Pre-approval, we get all the income documentations. We get W-2s, pay stubs, bank statements, photo ID. That's kind of the main things we always require. Sometimes we need tax returns. We do a full loan application, pull credit, and that is a much stronger offer, I guess, would be what I'm trying to say.
Okay.
For a seller's side, they like to see a pre-approval. They just know it's more solid. People don't like surprises when you're doing a big purchase, and that's from everyone involved in the transaction. We just kind of avoid it. So pre-qualifications are great if you're just trying to figure out ballpark, what do I qualify for? What are my options? What loan products would I be looking at? But if you're kind of in the process of shopping and you're actively looking or want to put an offer in, I always recommend just getting a pre-approval done. Then it's solid and you're ready to go when the right house does come up.
Sure. So. Okay. Also, I guess people have asked, do we have to pay off all our debt before we can qualify?
Yeah, no, you do not have to pay off all your debt. A lot of times it's not even recommended, potentially. Every win situation is different. It's great if you don't have any debt. Obviously, you're going to probably qualify for more than if you were to have more monthly payments for debt. But no, you don't need to pay it all off.
Oh, sure. Okay. And kind of on that line, having no debt is always better than having some debt, I've heard.
Yeah, so, that depends again. So it's tough if you don't have a credit score. That's I know there's like a Dave Ramsey. I'm a big fan of Dave Ramsey, but that's one thing I differ on is having a credit score is important. There are some options for people without credit scores, but it just makes it a little tougher. They're generally going to have a little higher interest rate potentially. But it's having some debt is okay.
Yeah.
So,
And then, like you said, Mr. Ramsey, debt is dumb, cash is good. Cash, So, at any rate, also, should we empty our savings to pay off the debt before buying?
Yeah, so it kind of depends. Most times I would say no, you don't have to do that. It depends on how much you want to qualify for, different things like that. But a lot of times people will qualify for a payment that they're comfortable with their current debt load. But we can always look at it and assess it. I usually just say, hey, let's have a conversation about it and figure out what would make sense for you and the sales price you're looking to purchase in or the payment you're comfortable with.
Okay. And also, we were just kind of talking about credit. Now, do you need perfect credit to qualify?
Yeah, so actually credit is pretty flexible. There's different loan programs that cater to little lower credit scores, different things like that. And a lot of people are surprised that you can qualify with your current credit score if you think it's bad. But again, what people think is a bad score, a good score, excellent score can kind of differ. And then also I just tell people for credit score, a lot of people have them like on their credit card apps or their bank app on their phone, and that's usually pretty close to where we're at, but we can see 20, 30-point swings for how they score a mortgage. So there's like 14 or 15 different mortgage scoring.
Wow. Okay.
Yeah. So it's not. So sometimes it might be better or higher than you think, even what you're seeing on some type of app. So
okay. Also, if we open a new credit card, Jared, does it help us get pre-approved?
Yeah. So usually it works against you. It usually doesn't necessarily help. We look at credit inquiries. That is one thing that shows up on your credit report. So if you had a lot of people pulling your credit, you'll actually see your score go down, which again is going to hurt your qualifications for a mortgage. But yeah, so generally say let's not do it, but there are scenarios where sometimes it does make sense. So
sure.
Take it case by case.
Yeah. And after pre-approval, is it true that opening credit cards is fine?
Yeah, so no, I wouldn't recommend doing that. It can jeopardize your loan potentially. So we do look at the debt-to-income ratio very closely as we're going through the mortgage process. It is monitored. So it usually is not too big a deal, but it can be. So it just depends on your debt-to-income ratio.
Sure.
That's what we calculate out.
Sure.
So, yeah.
Yeah. Well, this is a really good question here because I've seen examples of this. If you're just graduated from, you come out of college and you have student loans, but does that mean that you can't buy a home?
No, you can certainly buy a home, and most people do have some type of student loans coming out of college, so it's very common. Again, we were just looking at we look at your total credit profile and try to figure out where it's all at, but generally it's not a big deal. And then sometimes people are not making payments on there. That's another thing I could talk about quick. We do use a percentage of the balance against you, even if you aren't making payments. So just something to be aware of.
Sure. Yeah. Okay. Now, should we find a house before talking to a lender?
Yeah, I kind of touched on that. Generally, I would say if you are actively shopping and you're trying to potentially put in an offer, let's get pre-approved, get it squared away. Houses are moving fast sometimes. So
basically this is what I'm looking at. And
Okay. And sometimes in pre-approval, sometimes take a little longer than I would like, but sometimes we need to do a little extra digging and verifying income or doing different things like that. So we just want you to be ready to go when you find that right house.
Sure. Well, here's another great question. People have asked, is renting always cheaper than owning?
Yeah, so it depends, of course, but rent may feel cheaper, maybe a smaller monthly payment, but you're not getting the equity, building equity as you make your mortgage payments. We've seen a lot of people get a lot of equity over the last few years as far as appreciation in houses. But yeah, it's going to be dependent on the person, of course.
Sure.
So, but we can look at finding a comfortable payment.
Okay.
Yeah.
And once we're pre-approved, Jared, nothing can change. Is that true?
That is not true. Yeah. No, Tim kind of already touched on that a little bit too. But yeah, we're constantly monitoring things. Credit can expire. So sometimes we need to update credit. So if you've had new things changed there or scores gone down, you missed a payment or anything like that, that can definitely affect you during the mortgage process.
Sure.
So yeah, just something to be aware of.
Okay. And looks like, we have several things. We've kind of touched on some of these. What not to do before mortgage pre-approval.
Yeah, this is just kind of a nice little
kind of a pretty good checklist here. Yeah,
a good little checklist for everybody out there that is potentially in the market for buying a home. So we just want to basically avoid any new debt. So no new credit lines during the process. Of course, there is always flexibility, but that's something you just want to talk to someone about before you do open any new lines of credit. Try not to make any large purchases. Again, just have a conversation about it. We can check and make sure everything's going to be just fine for your mortgage end of things, but generally we just try to avoid that kind of purchases. Again, we don't want to, if you don't have to pay off all your debt, it's not required. We also tell people don't move money around without documentation. For seeing large deposits go in and out of bank accounts, we have to document it. It's usually not a big deal, but it's just more paperwork for you running around, and most people want to avoid that if possible. So it's usually fine, but we try to avoid it. And then also, big one, job change. Don't have any job change during the process. We can work around that as well, but we just need to make sure we can document any future income or job change. So again, we just recommend avoiding it if possible, but things change. So Another good one is we don't want anyone to be co-signing on any debt. See a lot of family members, that need some help and co-sign, and that does count against you for your debt to income ratio again. So just something to be aware of. Another one, don't miss any late payments. That's obviously going to affect your credit and can change your whole credit profile. So another one that a lot of people don't know is don't close any old credit cards. They look at the length of credit history. So even if you have a zero balance, you're not using it, just leave it open. The credit company will eventually just shut it down for you if you're not using it. And then it doesn't affect your credit. So, and then the last one, don't assume pre-approval means you're done. So that's just the beginning of the process. So,
yes.
Yep, but we'll help walk you through the process. It's not as bad as it sounds.
All right. All right. Well, Jared, lots of great stuff for us here today. Again, Jared Williamson, mortgage loan originator with Heritage Bank here in Wilmer, clearing up some common mortgage myths and providing us a lot of good info about mortgages. And Jared, thanks so much for coming on and being with us here today.
Yeah, thank you for having me.
You bet.